The global financial crisis, the GFC. This time last year, share markets around the world were plummeting, and there was more than a touch of panic in the corridors of power of some governments. A year on, and the crisis does appear to have settled, and confidence is slowly returning. I spoke to financial analyst Noel Whittaker to get his opinion on whether or not we are truly out of the economic woods just yet. Noel Whittaker, welcome to the program.
Thank you, good to be here.
Noel, it's been a rough ride on equity markets for the last 18 months, both in Australia and internationally. With a recent 3-month rally on Wall Street and the ASX, it does appear as if we're past the worst of it.
Well, I think what's happening, Tim, is the share market's behaving as it always does. It goes up and down. Every time there's a massive fall, the bounce back is always very, very fast when it does. I mean, the market's up 30% in the last 3 months, and that's what markets do. That's why it's so important to stay in. And all those people who said, I'll convert my money to cash and then put it back in the market when the market turned, have all missed out.
The global financial crisis in 2008 was due to the American institutions having such a large exposure to subprime mortgages. Have the liquidity injections by the US government managed to stave off a total meltdown of the system?
We've certainly staved off a total meltdown of the system, but we think there's still a long way to go to restore balance sheets. I mean, the banks are still talking about the need to reduce their funding costs. The banks are still raising capital. So we've made a good start, but there's much more to come.
Some observers are noting that it's not only the subprime loans that are in default in the United States, but it's also prime mortgages are in trouble. And following that, we have the commercial real estate bubble, which is said to be an even larger problem. Is it feasible that in the future we could have an even larger crisis on our hands?
Well, I think the market has anticipated the fall in non-residential. I mean, the listed property trust market has been decimated. At the moment, vacancy rates are way up. So I think the market has got all that factored in. That's why the listed property trusts, now known as REITs, have performed so terribly badly.
Since the beginning of the global financial crisis, some superannuation funds have lost 20 up to 25% of their value. And the International Monetary Fund recently reported that Australian retirees are more exposed to stock market crashes than any other country. Together, that sounds like a fair bit of systemic risk.
Well, I think the first thing is people need to understand that superannuation is not an asset class like property and shares. It's a vehicle that lets you hold assets in a low tax area. And of course, when you retire, it becomes a zero tax area. In the UK, particularly, they've had a much bigger focus on bonds, whereas we've had a particular focus on shares. In fact, our bond market, when Costello and Howard paid off the Labor government's debt, we virtually didn't have a bond market. Well, now, of course, there's bonds everywhere, and you'll see more bonds coming back. But in my mind, bonds still carry a higher risk than shares.
There seems to be a growing perception in the community that financial assets, or so-called paper assets, are no longer trustworthy, and many people are taking a serious look at harder assets such as real estate, precious metals and commodities. Would you consider that to be a prudent move?
Well, I guess they're different assets. I mean, top properties in Sydney have dropped by 40%. Property in Ireland has dropped by 50%. The median house price in Detroit, Michigan, America, is now down to $10,000. So property isn't the safe haven people think it is. Gold and other things, I mean, who knows? But I still like investments that earn income. And I think if you're going to buy gold, you're better off to buy shares in gold producers, where at least you're getting the franked dividends.
Noel Whittaker, thank you for talking to us today.
Thanks, Tim.
Noel Whittaker joining us there, and it seems the recession does have some way to go yet. And we will be keeping you updated on what's happening in financial markets, both here and abroad, in future programs. Back in a moment.